Good evening from London. The UK is projected to lose 9,500 millionaires this year, second only to China, amidst a backdrop of economic and political uncertainty in the country. That's according to a report from Henley and Partners. It's more than double the number that left the country in 2023 and lags only China, which is expected to lose 15,200 millionaires this year. According to the report, the exodus of high net worth individuals began after 2017's post-Brexit period, and it has been further exacerbated by the abolition of the non-dom tax regime, a 40% duty on certain estates, as well as Labour's commitment to remove their 20% VAT exemption from private schools. The Australian dollar rose broadly in Asian trade today after a week's low in its US counterpart, making it the best performing major currency. This follows the Reserve Bank's decision to hold interest rates unchanged at 4.35%, its highest since November last year. According to the body's president, Michelle Bullock, the bank still has a long way to go before bringing inflation targets in the medium term, and that a rate cut is not on the cards for the time being. Analysts have suggested that they expect the bank to start easing policy next year. And Shell has agreed to buy Singaporean gas company Pavilion Energy from global investment company Temasek in a deal analysts have estimated is worth hundreds of millions of US dollars. The deal will provide the oil giant with access to gas markets in Europe and Singapore as it aggressively expands its liquefied natural gas footprint. Shell says this news is in line with its 15 to 25% growth targets for purchase volumes projected in 2022. According to official statements from Shell and Pavilion Energy, the transaction is expected to be completed by the first quarter of next year, subject to regulatory approvals. And those are your main stories from London at close of business.